welcome to all the audience who take out your time to be here with us tonight. And welcome to Professor Rebecca Henderson from Harvard University and Professor Mark Stabile from INSEAD Hoffman Global Institute for Business and Society. My name is Ni Dao from the Endeavor Social Impact Club here at INSEAD. So almost 50 years ago, Milton Friedman has said that the sole purpose of the firms is to maximize profits. And definitely his legacy has influenced the way that we've been doing business. But 50 years later, many of us already started to question his legitimacy, to help us solve our 21st century's challenges, including climate change and inequality. So that gave us a question, moving forward, how we people standing here, how the business world can help us, save our world. So to help us answer that question tonight, I'm extremely honored to have Professor Rebecca Henderson to share with us how the current capitalism should be re-engineered to better address our today's problems. So Professor Rebecca Henderson is a John and Addie MacArthur University professor at Harvard. She's also a research fellow at the National Bureau of Economic Research. And at Harvard Business School, she teaches one of the most popular MBA elective titled Reimagining Capitalism. And she also launched a book under the same name, Reimagining Capitalism in the World on Fire, which lay out steps for the private sector to catalyze systemic change to save our planet. So for the agenda for today, we're going to have Professor Henderson sharing with us first, and then follow with a dialogue between Professor Henderson and Professor Stabile. And then finally, we're ending with a Q&A section with a larger audience. And so now, without much further ado, please help me welcome on stage Professor Henderson.
Need to know how to turn this off. Otherwise, we'll get feedback effects. Thank you for demonstrating. I might have a degree from MIT, but I couldn't turn the mic off. Nee, thank you very much for that kind introduction. And my thanks to my hosts at INSEAD for inviting me here too. It's a great pleasure to be here. I've had many friends and colleagues come and teach here or come and be students here. I really appreciate your taking the time at 7 o'clock in the evening to come and hear me speak. This is only the third time I've given a live talk in 18 months. And I've given something like, 300 or 400 talks. So it's amazing to be live. Sorry about the mask, but wow, it's more fun than Zoom. So thank you very, very much for being here. Let me begin by asking you this question. Come on down. There's tons of seats down here, and I promise I won't bite much. Let me start by asking you a question. How optimistic are you that the human race will fix the immense problems we face in the next 30 years? Hands up if you're pretty optimistic, we're going to fix them. Oh, fantastic, great, okay. How many people are hopeful? Yeah, I'm in the hopeful camp. I love that some of you are optimistic because it increases the odds we'll fix it. I am not optimistic in the sense that, hey, this is a done deal, no problem, just sit back. I think we're in a very difficult place. I think the problems we face are immense. And I don't know if you've noticed, but we're having some political problems addressing them. So I want to talk not about how business can save the planet, but about how business can increase the odds that we save the planet. So I don't for a moment think that this is a done deal, that business is just going to fix it, no problem, we can go home. I think we're in a desperate moment, and I think business can be incredibly helpful. So the key word here is a catalyst, a systemic catalyst. So let me give you a sense of why I think business can make a difference. And as I say, I don't think it can be business alone. I think we have to have a massive social and political movement to address the big problems that we face. Why is it so important to have more than business? Because while I strongly believe there's a business case for doing the right thing, I think in many cases that business case will take us only about half the way. So, for example, we now have good evidence that most companies can reduce their greenhouse gas emissions by about 50% and make money while they do it. But then we have the other 50%, and that's harder. So in order to get that other 50%, we're going to need some kind of state regulation, some kind of price for carbon. Similarly, in order to decarbonize the entire economy, we are going to have to revolutionize, let's see, electric power, check, transportation, agriculture, construction, infrastructure. This is a massive collective action problem which is going to require everyone to buckle down. We're going to need business in partnership with the state, where we can, to get the whole way there. So that, for me, is the end state of where we're looking, is business moves first and aggressively, stimulates political action and action by other firms, increases the odds that we're going to get this kind of tight partnership that will ultimately get us there. So that's like the overview story. Let me try and break that down and make it plausible. So first, what is the role of individual firms? Individual firms, of course, can change thousands of lives, tens of thousands of lives, by committing to doing the right thing. Think about the effect that Walmart had when it raised wages for its 1 million workers. Right? The CEO was convinced that raising wages would increase productivity, engagement, and innovation. Very good data to suggest that that's a reasonable expectation. If you don't know this, Mark, and I don't know what you teach here, but I'm a huge fan of Zeynep Ton's work at MIT and the Good Jobs Institute. I talk a lot about high commitment work systems. Revolutionary idea, you ready for this? We treat everyone with dignity and respect. We give them the resources that they need to get the job done. We decentralize power. We give them a decent wage. Whoa. Productivity, innovation, creativity. Very good data that you can run a firm very well this way. I'm not promising you it's the royal road to outsized riches. Absolutely not. Being authentically purpose-driven, that is, embracing the idea that the purpose of the firm is not to maximize shareholder value, but to, in the words of Colin Meyer, solve public problems profitably. Whether that's creating jobs or addressing inequality or decarbonizing the economy, doing that's expensive. Because if you're going to be authentically purpose-driven, you have to occasionally allocate resources to it. You have to take a financial hit. Otherwise, people would just say it's, just talk. So, for example, when the CEO of Walmart raised wages for people at the bottom of his firm, he announced to the street, his CFO did, that he was going to take a $3 billion hit to the bottom line. The stock price fell by 16%. In some firms, he would have lost his job. He had the full support of his board. They believed the long-term story. They believed that this was an investment that really was a win-win. But it was costly. It was expensive. It was a personal cost. It was a short-term cost. So it's not that purpose is the royal road to riches, but we have overwhelming evidence you can survive, you can compete, and in many places you can thrive. Purpose-driven firms can play an incredibly important role. They can improve the lives of their employees. Check. They can begin to address really tough problems, like making our economy truly circular. One of my friends is a guy called Erik Osmundsen, who decided to go into the waste business in Norway. Why did he want to go into the garbage business? Who wants to do garbage? Because he thought if he could reduce garbage, if he could really introduce recycling, he could improve the emissions of the industry by hundreds of thousands of tons. So really reduce emissions. It was tough. It was hard. When it turned out the garbage industry totally corrupt. When he gets in as CEO, he says, well, I'm going to run a clean business. I'm going to tell the truth. I'm not going to ship mislabeled garbage to Africa. He got death threats. Police protection for his children. So it's not easy to be purpose-driven, but he completely transformed the waste business in Scandinavia. He's not super rich, but the whole industry has transformed to circular recycling. He has a very good business model. He has tipped the entire industry to behave in a more productive way. So individual firms can have local effects, great. They may even have industry effects. Let me suggest they may also have political and cultural effects. According to a recent survey by Richard Edelman's organization, the single institution most people trust the most is the firm they work for. I'm not sure I believe that, but it's very interesting. And it suggests the way in which firms are one of the few institutions we have that's still globally respected, that many people trust. If the institution starts talking about we must solve climate change, we must address inequality, that may be supportive to political and social change as well. So individual firms, fantastic, can do great things. Clearly not enough. Clearly not enough. You reach a point where you realize that your own commitment, however big you are as a firm, is not enough to shift the world. I think that's good news. Because now you have a firm that has committed to its employees and its customers, and its investors sometimes, that you're going to do good things, and whoa, you suddenly can't do it. So one example that made this point for me was Unilever. Some years ago, they committed to buying only sustainably grown palm oil, because deforestation is a major driver of carbon, horrible problems in the supply chain. So they said to their customers and their employees, we are going to use only deforestation-free palm oil. Big announcement, protect the brand, clear business case, great. Not so great. It cost nearly 20% more than dirty palm oil. And this was a commodity business. Customers were not willing to pay more. So what do? You have a 20% cost disadvantage. That's a huge problem. What Unilever did was go to all the other consumer goods companies and say, you have the same problem. Your brand is exposed. Your customers and your employees are not going to like the fact that you are funding all this massive deforestation of primary forest. Join us in acting together to stop deforestation. Solve the collective action problem, right? Because think, it's not in business's interest to toast the planet, drive inequality, see massive, what's the polite phrase? Political volatility. You're noticing political volatility is not good for business. So collectively, if you can get everyone to agree, then maybe we can solve these problems. Unilever gets everyone into the room. They agree to stop buying dirty palm oil and dirty beef and dirty soy. So 67% of the world's publicly traded commodities committed to sustainability. And they made progress. They discovered measures they could use. They worked out how to audit what was going on in the supply chain. Lots of declarations, lots of excitement, horrible grinding noise. Because collective action is hard, right? Not impossible. Humans are wired to act collectively, but at this kind of scale, at global scale, it's hard. If there's no penalty for free riding, sure, I'm going to only buy sustainable palm oil, but this quarter I'm going to go a little cheap. This quarter I'm selling to the Indians or the Chinese. They don't really care about sustainability. I'm just going to take shortcuts. So it turns out that while we have nearly 200 collective, at least 200 groups of firms acting together, at least 200, right? It's probably much more. Groups of firms coming together. We're going to reduce labor abuses in our supply chain in textiles. We're going to get rid of corruption in mining, in the mining industry. So people are attempting to act collectively, but it's hard. It's hard to maintain that collective equilibrium. So what do you do next? You say, who can enforce doing the right thing? For those of you who are analytically inclined, and ignore this if you're not, imagine one way of thinking about we're in a kind of low-road equilibrium. I'm going to emit greenhouse gases and not pay for them. I'm going to drive wages down. I'm going to corrupt the government if I feel like it. This is kind of a low equilibrium. What we need is everyone to switch to that high-road equilibrium. It's in everyone's interest. It's going to be much more fun. We'll make much more money. We're going to innovate like crazy. We need to get to that high road. Who can enforce that switch? Two potential actors. First, the capital markets. Now, lots of you are MBAs, so perhaps you don't think this is a crazy idea. But believe me, when I say to general audiences the capital markets might fix this, everyone starts giggling. Okay, finance doesn't have that great a reputation, but let's build out the case. Why might finance be the solution? Well, firstly, lots of evidence, as I said, that the purpose-driven firms are innovating, they're building new industries, they have higher productivity, maybe we'll get higher returns. Maybe my investors are a bunch of greenies, and increasingly a bunch of greenies is about a third the people on the planet. So about 30% of financial assets now are being explicitly managed with an ESG sustainability metric. So okay, so maybe finance gets interested. Here's the really important thing. wealth is really concentrated, even more concentrated than you think, which for many reasons is probably not a good idea, but for this reason is interesting. I have colleagues in the law school writing papers with titles like The Problem of the 12. You know the problem of the 12? There is a room where 12 to 15 people get together. Between them, they're controlling, nobody is quite sure, but pick a number, 60% of the world's financial assets. That's kind of wild, right? But you should be able to solve the collective action problem if there's only 12 people. Because if you are owning the world, if you own the world, if your portfolio is so big that you cannot diversify away from systemic risk, you have a strong interest in solving the collective action problem. So when Larry Fink starts talking about purpose, and the big investors start pushing ESG, it's not because they woke up one morning and said, oh, I need to save the human race. No, 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 no. It's because they actually got the science on climate change, and they're like, oh my God. You know, the biggest way I can ensure serious returns on this portfolio is making sure we don't have a climate crash, which we might, right? So there's the technical term for this is if you're a universal owner, if you have to hold the whole portfolio, the systemic risk is a real risk. If you can fix the collective action problem, then you should. So we're seeing things like the emergence of the Climate Action 100, $40 trillion worth of assets allocated to saying to the 100 biggest emitters on the planet, you have to get your emissions down, we're not kidding. You see the Zero Carbon Banking Alliance, which was just announced in April, something like 70 trillion under management. We're serious about getting carbon out of our loans. We will not loan. That's super interesting, right? You go from individual firms showing there's a business case, that it can be done, to the finance people saying, okay, I want everyone in the portfolio to do that. Super exciting. Might get us carbon. Will it get us inequality? I doubt it. Will it get us political institutions and strong democracies? I doubt it. It's very interesting. So then we come in my last minute. What do we need? Well, I said at the beginning, what we need is a tight partnership between business and government. We need a democratically elected, transparent, capable government partnering with business to develop regulatory regimes and regulatory frameworks that help transition the economy. Sounds like a pipe dream, right? And now I'm going to say something even wackier, which is I think business could help us get there. Why? For many reasons. From some perspectives, business is the most powerful institution on the planet. It has the power to innovate. It has the power to shape societies. And for many years, many business people have said, I don't want anything to do with business. In America, they said, I want to drown it in the bathtub. And in many countries, of course, you don't want to have anything to do with business because it really doesn't work very well, with government because it really doesn't work very well at all. So here's the interesting question. Will the private sector wake up to the fact that we need the state? That if the state needs to have better capabilities, if it needs to be transparent, if we need less corruption, could we work with the state to really build strong institutions? The only thing that will fix us in the long term is what the development economists call inclusive institutions. The power of the free market harnessed with the power of a strong, transparent democracy and a strong civil society. All the data we have suggests that that's what drives growth, that's what drives social well-being. So could business help? Perhaps. You see it locally. You see business people working at the city level to improve education and health, to really think about how to improve the whole community. You see talk about improving democracy. In the US, there's a movement among some of the big firms to really protect voting rights, to drive carbon legislation. And historically, there have been moments when the private sector has sat down with government and with civil society and said, okay, this is a mess. And our strategy of keeping everything for ourselves and hoping it works out all right is not working. We need a different way to play this game. It happened in Germany post-World War II. It happened in Denmark in the 19th century. It happened in Mauritius in 1968. It's not easy, but it has happened. Something like this seems to have happened in South Africa and Chile. which is the private sector went from thinking only about itself to thinking about the health of the whole system. The bad news, and the reason I'm hopeful rather than optimistic, is this only seems to happen when the whole system is on danger of collapse. So that's a theory of change. You got that? Private sector can save the world. Individual action, super important. Cooperation generates measures, takes us a great deal further. Got to bring in the financial sector. Metrics are super important in this conversation. If you can't measure, it's just talk. And last but not least, maybe, as the private sector starts to move, these firms develop an interest in a strong, vibrant society and become active partners in helping to create it. So that's why I'm hopeful. I didn't talk about what people can do, but maybe we can get to that in the Q&A, because I don't want to let you guys off the hook. The next generation is waiting for us to fix this problem. All change starts with individuals, and perhaps we'll have a moment to talk about what it is that you can do to make this happen. Thank you very much.
This seat?
Why not?
All right, and I'll take this one. Well, thank you very much. The talk was almost as exciting as the book, which was a great read. I highly recommend. The better part about the book is that there's lots more to get into, so that's what differentiates
Well,
it.
you gave me 20 minutes in the book. I have 288 pages,
so,
you know.
So my plan is to spend a few minutes just asking a couple of questions of Rebecca while you guys prepare your questions, and then we'll turn it over to the audience. And if you know how to use the microphone, use the microphone. If you don't, shout. So there you go. And so you have me sold on purpose-driven firms, for sure. I mean, you had me sold by chapter 1. I want to ask a few questions on how we get firms towards changing to be purpose-driven firms, right? Because there's a lot of firms out there that are not, right? And a couple of themes came up in the book. One just was that a couple of firms, and you mentioned Walmart, but you also mentioned Nike in the book, they had to have their moment of pain before they became purpose-driven firms. So I want to ask first, is that a requirement, or do you see that as a common thing that many firms have to go through, a reputational challenge, being called out in the media before they see, okay, this is the way we have to go, even though we know there's possibility for good profit there?
So first, let's just talk about what it means to be a purpose-driven firm. It's not that you just make a nice press release. You know, so many firms think, well, the way we get to be purpose-driven is we just adopt a purpose. No. Being purpose-driven is a change project, a deep change project. You need to change at the individual level. You need to build the culture so you're really authentically committed, not to maximizing money at any cost, but really addressing these problems. And you need to back that up with a structural reorganization. New incentives, new metrics, new structures. It's a big deal. It takes time. So you're asking, because you're right, I began the talk with let's just assume purpose-driven firms and how they can change the world, but I did only have 20 minutes. So what drives firms to become purpose-driven? There seem to be several routes. One route, it's really important, I didn't talk enough about it in the book, is individual entrepreneurs. Because I spent 20 years of my career studying change in large organizations. One of the most important levers of change is small firms doing things differently. It drives the big firms nuts. And sorry, that was a technical term for it provokes a competitive response that is very, very helpful. So individual entrepreneurs who just see what's happening in the world and they want to build a firm that changes it. So you see that a lot in energy, you see it in clean tech, you see it in plant-based foods, you're beginning to see it in textiles. So firms can get pushed by small entrepreneurial firms. Sometimes you're right, the firm gets to the edge, looks over the edge and says, okay, I'm not going to go there. That's what happened to Walmart. Sometimes firms see this as a way to differentiate themselves. So perhaps some of you saw Paul Polman's speech earlier. Very powerful, charismatic man. Unilever's been super, super successful. Why did they leap into sustainability years before anyone else? I will tell you a dirty secret. It's true, Paul really cares about the world and really wanted to make a difference. But sometimes he doesn't stress quite so much that Unilever was the worst performing consumer goods giant on the planet when he became CEO, and he was determined to fix that. It was straight competitive differentiation. He thought that he could really change the industry by taking this route. Now, it helped that he really cared, but he was furious. He'd been turned down for CEO at P&G and at Nestle, and he was going to show those guys that there was a different way to run the firm. So I do see people move because they see the competitive differentiation. You know, someone like Elon Musk is really interesting, right? Difficult, complicated man. But because he was passionate about making a difference against global warming, he's accelerated the transformation of the whole industry by 5 years. There's another really important source of change I really want to mention, which is employees and children and customers. I know one firm that changed because the employees were embarrassed to talk about the firm at PTA meetings. I'm sorry, that means, you know, the school board meetings. They just couldn't explain to other parents like why they were rapidly destroying the planet. That just was really hard to do in public, so the whole company switched. I know companies where it's been local employees who decided to run their individual business differently. It's a very powerful source of change. You don't see it in the papers. You always see these kind of hero stories about the CEOs. But often the CEO changes because employees are saying, look, we can do this or we can do that, and why don't you pull it together? So it's not just the CEO gets a vision, or there are many routes to this. And I also think the world is really changing. I mean, more and more firms are thinking they have to go in this direction because, hey, it's where everyone's going.
Yeah. So actually, one of the things I really liked in the book was that you made a strong case that purpose-driven firms are not only purpose-driven outwards, they're purpose-driven inwards. In fact, just to pick up on what you just said, right, that in fact what you often see is these go together. It's not just that they're doing good for the world, that they're treating their employees properly, that they're almost hearkening back to a, not like a 1950s capitalism, but some pieces of 1950s capitalism where the firm was taking care of its employees in a different way. And I wondered to myself, is this, you know, is there something about the governance of those types of firms that allows for that to happen, or is it just firms deciding they want to be both purpose-driven inwards and outwards?
Oh. You do get firms that are just purpose-driven outwards. So Tesla appears actually to be like that. He doesn't really care about the people on the shop floor at all. But mostly the in and out go together. And it becomes a question of consistency, right? If you say you really want to make a difference in the world, it's hard to be treating people inside really badly. And similarly, I know a bunch of firms where they started by treating their employees really well, and then they had to move outwards because, you know, where's the boundary? Right. I think, you know, you're kind of walking up to a really tricky issue here, which is how much of this is simply understanding strategically this is the right way to go, and how much is it about really feeling that as a business person, you want your business to make a difference in the world. And if you really want to make a difference in the world, you start with the people right in front of you.
How much of it is centered on the CEO? You said it doesn't need to be, but you know, you also make the case in the book that the CEO often they see the business case, but they also have the moral, you know, drive to make that happen.
I think the CEO is hugely important, but I think now, in particular, so many firms see they have to move in this direction. They're being pushed by their investors. They're being pushed by their customers, and they're like, how do we do this? What do we do? So this is really a moment for sort of everyone to pile in. Now, if the CEO is opposed, it's very hard to get anywhere.
Okay, let me switch questions a little bit because we're in the middle of COP26, right? And this book, a big part of this book is on climate change. So I want to take the opposite. You know, I'm not as optimistic as, or even hopeful potentially as the broader audience. I mean, there's a case to be made that firms have also been real actors in blocking climate change, particularly in the country where you work, but not just the country where you work, right? A number of other countries. How do we deal with the sort of the tension between the fact that, in fact, one of the reasons we don't see stronger action on the climate is because a number of firms have been pretty successful at blocking that kind of legislation.
So you've gone right for the secret agenda in the book. So here's the secret agenda. One of the reasons we're in the place we are is because firms have been actively engaged with the regulatory and cultural processes to slow down action on these issues. You know, in the United States, where I live, we haven't seen a real increase in the minimum wage in many years. And we've seen active climate denialism and a wholesale attempt to bribe or bully the legislatures to avoid climate legislation. So in the words of one editor who turned down publishing my book, "Business saves the world. You have to be kidding, Rebecca. Don't you read the papers?" So here's the thing. no one now would say in public that employing child labor is the right thing to do. I mean, children are really cheap and they have great manual dexterity. What's not to like? If you're trying to maximize shareholder value, let's get the kids into the factories. No one would say that in public. It's just not okay. So one of, I think, the hopeful byproducts of this agenda is that it gets harder and harder to actively resist this movement. You see that at the local level. I happen to know quite well the CEO of a major fossil fuel company, known him for many years. A year and a half ago, I found him alone. He looked at me and he said, Rebecca, I spent my career building this business. I thought I was doing a great thing, building a business product that people really needed. Now everybody hates me. His words. So it's getting harder to do this. So sometimes I think the point is not to get business to do good, but to stop doing the really terrible stuff. Like we know one of the reasons in the US the Biden agenda went down in flames was business was like no more taxes, and parts of it may survive, but business was not helpful. So it's not only about playing a positive role, it's stopping doing this really negative stuff and really, maximizing shareholder value, toast the planet, corrupt the legislatures, why not? We've got to stop that. That's got to be unacceptable.
Yeah. So I am very much in agreement with you on the need to fix democracy, to make capitalism work better, to have democratic capitalism that actually has markets that are fair and functioning. On the climate change problem, we have a lot, and this is not passing judgment in any way, but there's a lot of big players in climate, in carbon, that are not democracies, right? And yet we need all of these countries to, in fact, move, and the businesses that operate in those countries to move in tandem. How do we deal with that tension that, in fact, there's problems in democracies that we need to fix, but in fact, that's not going to be nearly enough, given how many different systems are out there that control a lot of the agenda.
For sure. And let's be explicit. Unless China and India are deeply committed to this agenda, unless Africa, as it develops, is deeply committed to this agenda, we're not going to get where we need to get. And some of those countries aren't particularly democratic. So here's how I think about this. I'd be super curious what you think. We have to get the costs down. If we can get the costs down far enough, then the natural way to build your energy infrastructure or your transportation system or your cities will be carbon-free or greatly carbon-reduced. So I think we have to think not only about explicit transfers, like the West paying to stop deforestation, but it's so important to drive those innovation cost curves. I mean, look, renewable energy is now cost-efficient in more than half of the world. Green construction is now like the way everybody builds because it's just the only way you would build. Why would you do anything differently? So my hope, and the book is very focused on the West, but for this reason, is the only way to do it is to get the cost down.
Yeah. I mean, I'll add my 2 cents and maybe we'll take some questions. That, if I had to pick a government that I think actually is credible in its targets and that businesses will respond to, it wouldn't be a Western government.
No.
It would be China.
Yep.
Right? So in fact, there's every reason to think that China will lead in the sense that it's setting targets that we can be pretty sure they're going to stick to versus...
Oh, so here's a reason I'm perhaps more hopeful than you are. I think fairly soon now, it's going to be politically impossible in the West not to really enforce carbon restrictions. So that's just a belief. I think, again, it's getting so clear that the costs of inaction are just enormous. Yeah. But I might well be wrong. It's easy to be depressive on this.
Let's hope you're not.
Yeah.
Okay, some audience questions. Who has a hand up? We'll use hands and the mic. Yeah, at the back. First show.
Hi, thank you for doing this and doing the talk. I haven't read your book, I apologize.
Tomorrow.
Thank you.
It's out there.
You talk a lot about becoming a purpose-driven company as being a trade-off in terms of the profit line for a lot of these companies because they have to change about how they're doing and what they're doing, and I assume that's what you sort of mean by reimagining capitalism. But then a lot of your solutions, like the ones you just mentioned, are based on entrepreneurs and new businesses innovating in a way that capitalism encourages. Fundamentally, long live the king, so on and so forth. How do you sort of marry those ideas? Because, the rise of Tesla is a very good example of a company which has basically out-innovated the incumbents without any help. I mean, they had a huge amount of political help from like Nevada and stuff. But, how do you marry those two thoughts? Because there shouldn't be a trade-off, realistically, because that's how the world
So first, I clearly wasn't clear enough, and my apologies. I do not mean to suggest there is a long-term trade-off. There's a short-term trade-off in being purpose-driven. In the long term, I think we have every reason to believe that purpose-driven firms should be just as profitable as more conventional firms, and in many cases more profitable. We have some very nice data suggesting when the purpose is really integrated to the strategy, you innovate much more effectively, you're really going to move much faster. So I think there's a short-term trade-off in some cases, because it's hard to get there, but that it pays back, in ways that we can measure and are very, very credible. The relationship between entrepreneurs and big companies, you have to have both, right? And let's take your Tesla example. So Musk comes in, he starts innovating like crazy, drives down the cost curve, he demonstrates that it's possible that there's a market. All the big car companies start moving because entrepreneurs can't do it alone. You need the big companies to be moving too. And it's quite striking to me that it was the more purpose-driven firms who started moving earlier. So it's like activation energy. If you're purpose-driven, you're more open to these kinds of innovations. You use the entrepreneurs to drive your own organization. We're going to need both. So becoming purpose-driven doesn't mean giving up profits. It means giving up short-term opportunities right now in order to build a more purpose-driven, more future-proofed organization in the longer term.
Question in the back, yep.
Hi, so at a systemic level, what does success look like for you in your mind?
So I don't think I know. I think we have to imagine this as an evolution. That is, we're trying to recreate capitalism. And to Mark's point, we're trying to do it globally. And we're not sure what that looks like. So I don't know in the end state whether we have like a kind of child labor solution, which is the whole business establishment has just said, okay, we're not going to compete on dirty fuel, we're going to pay decently. It's just a way to get a better economic system. Or whether we succeed in really supporting the state and getting this kind of state governmental partnership, and can we do that globally? But success to me, one of my friends said, Rebecca, you called this Reimagining Capitalism. Maybe you should have called it, could we please go back to the 50s and 60s only without the racism and the misogyny, please? So, if I could get to Denmark at a global scale, I'd be there in a moment. It's not perfect, but whoa, it's better. If I could get to the best aspects of the Japanese system before they got complacent, and forgive me if anyone from Japan is here. Japan is an amazing economy. We tend to forget how fast it grew and how large it is. It's arguably the most successful economy on the planet by some measures. But they did it through what we would call stakeholder capitalism, which is the goal of the business is to advance the well-being of the society. So it's not that it hasn't been done. But that's, I think, where we need to get to, is the goal of business is to advance the well-being of society. We need the competition, the innovation, and the dynamism, but there have to be guardrails. Whether those guardrails are business-imposed, capital markets-imposed, or state-imposed, that's where we need to get to.
Right here in front.
Hi, thank you for the talk. What would be your hopeful and or optimistic outcome from COP26 this week?
Oh, my goodness. Strong public statements, aggressive targets, and a bunch of stuff we never see, which is behind the scenes, people saying, look, if you move, I will give you resources. Here are the firms that will, here's the technology. So I'm not looking for COP26 to fix things. This is a process, but just more progress on that process.
You mentioned you wanted to talk about the role of the individual. It would be nice to hear a couple of thoughts on what an individual can do as well.
Thank you very much. The world is so big and so complicated and such a mess, it can be very difficult to believe that we individually have any real role to play. But of course, if we all do nothing, nothing will happen. The metaphor I like to use is that we need an avalanche of change. And avalanches are driven by pebbles. We basically, I'm going to make a horrible generalization, my apologies to my scholarly colleagues. We don't really understand social change. We know that it happens very quickly and you need a lot of pre-work, but suddenly it happens. And so there's something about contagion. Some models suggest we need maybe 20% of the population moving. So I think it's super important to identify what you can do. So just quickly. 1, of course, you can be an entrepreneur. Amazing. Push the big companies. 2, you can join one of the big companies. Learn what you need to do, learn how things work, go into operations or sales or marketing where the action is, but with this kind of mindset. So many firms that I know change because their employees insist. One of my friends who's a CEO called me up a few years ago and he said, Rebecca, you know I think all this sustainability stuff is bullshit. Sorry. I said, yeah, I know you think that, Fred. We were very good friends. He said, well, you know, but everyone I'm trying to hire thinks it's important, so would you come and talk to us about it, please? He's now a very purpose-driven CEO because he's very smart. He could see what was happening in the firm and how he needed to go in that direction. I was working with a whole bunch of very senior CEOs just right before the pandemic in a room about this size, talking about climate change. I could not get them to move, just could not. They were just sitting there like this. Have you ever seen this? Like leaning back. Nearly everyone in the room was male. There were 2 women. And I said, well, what do your children think about this? And the whole room lit up. You know, so you as an employee, a family member, a friend, you can make a huge difference. Last but not least, political action, please. We really need political action. It's key to really making fast progress, so get politically active. Super important.
Yeah, right here.
There was lots of mention of carbon tonight, and I guess the E in ESG is now reasonably easy to sell because it's bad for business if we all die. Are you equally hopeful for social progress from reimagining capitalism?
So you might have heard me say, I think the financial sector might get us climate for exactly the reasons that you mentioned. They can see the threat, and it's a threat to their bottom line. Social change much harder. Here's why I think we might get it. There is increasing recognition that we won't get carbon without social change. That if people think that this is just yet another thing the elites are foisting on them, and you're going to raise my energy prices for your own good, like I don't care about energy prices, I'm working 2 jobs and living, you know, moment to moment. Unless you address the social issues, the rage and anger that's out there, we're not going to get carbon. And I think it's easy to say that. Mind you, like 3 years ago, I wasn't hearing people say that. I don't know about you, Mark, but now I'm actually hearing people say that, so that's progress. And the good news is not that hard to make progress. We know the policies. We know it would be good for economic growth. It's tough, right? Because a small group of people has most of the productivity gains in their bank accounts. So how you get them to like release is a big issue. And the whole problem of populism is super tough. You know the solution?
No, but I'm going to say there are two pieces that I'm troubled by, right?
Yeah.
And you've touched on both. The
Yeah.
first is this idea of this room of 12.
Yeah.
Right? That this is not
democratic.
It's not democratic, and it's not improving inequality for sure,
No.
right? So that I'm troubled by because you don't want to think of these things as a trade-off.
Right.
The second is, the reality is that a lot of the measures that are taking place, and let's talk mainly in richer countries right now, to move towards net zero are costly.
Yeah.
And they're costly particularly for people who don't have as many alternatives to adjust, and those tend to be lower income people, right? And so it's clear that you're right, that if you don't think about inequality, fixing climate is going to hurt a lot of people, and a lot of those people are your voters.
Right.
So that's a problem. The solution is more difficult, right? Because carbon taxes are inevitably a little bit regressive.
Can't I do tax and dividend?
You can, but this
Tax and dividend is when you take in the tax money,
Yeah.
then you divide by the total population in the country and send the checks out.
Canada does that.
Yep.
So I'm Canadian, so I'll give a little vote for that. But it doesn't do it in a progressive way, right? It just gives everybody the same thing back, even though
But I thought people at the bottom get, in fact, more money than they lose in energy costs.
they do for now.
Okay.
They do for now. So they get the same money as everybody else gets. They do for now because the market hasn't adjusted the prices
Right.
as much as eventually the market has to adjust prices. Then we're going to start to see a bigger hit. And I think this is going to be it's going to be a very difficult winter.
Yeah.
But we're going to learn a lot this winter. Gas prices are going up. Electricity prices are going up. Carbon taxes. I mean, even for all I have to say about Canada, the carbon tax is very low. Right? It's $40.
It's tiny,
But in 5 years, it's going to be $170. Then we're going to see. Anyway, I want to make sure we get some other questions on the table. But
We could geek out on the carbon tax details. Sorry.
So one of the things you mentioned is that in the book is that businesses cannot agree. So if one company wants to do good, then their competitors might not be aligned, and that's in some ways like a tragic economic issue. So, and then you mentioned so we need laws and policymakers to figure a level playing field across all players. But then let's say the U.S., for example, there's 500 lawmakers, and if we want all of them to agree, we need like 250 of them. Whereas in any industry, or what you mentioned earlier, like 12 of them. So So isn't it easier for 12 people to agree versus 250 people to agree? So how do you
So that's why I start with the 12 people. On the ground, the secret seems to be to start local. So in deforestation, they started jurisdiction by jurisdiction. In the States, they're starting city by city. So can we bring down carbon emissions in Cleveland? Can we increase education? Can we reduce inequality city by city? National politics is hard. Global politics, even worse. But you've got to start somewhere. And what we're seeing is even in the States, which is highly polarized, you can get some progress at the local level because everyone knows everyone and the costs and consequences are very clear. So that's the best I can do. Start local.
I think there can be, different differences among different capitalist systems. For example, if you look within the Western democracies, in the US, you have a more liberal bottom-up approach, whereas in European democracy, it's more a capitalist system. It's more, I would say, coordination-oriented. So out of all the countries or the regions in the world, do you think there would be one region or country that is more likely to drive the systematic change at a faster speed or in a more sustainable way?
I think Mark's already said it. The big uncertainty is China. So if the Chinese decide to get serious about this, and there's every sign that they are, I think they will be the fastest. I think otherwise it'll be the Europeans. And again, there's a big unknown around the US. If the business community could be persuaded that there really is real downside, that the innovation's not that hard, and that the country could really become a leader in this area, the states could move much faster. I don't think right now the odds on that are high. 10 years ago, I would have put them quite high. But it's still the case that the economy is very flexible and very innovative. And so if there really was a general consensus, this is where we needed to go, I think everything would happen much faster and much more cheaply than we think. But still open.
You've had your hand up for a while back there.
What are your thoughts on the efficacy of divestment strategies versus trying to have activists on boards, et cetera?
I think that investors should begin with engagement. So these are, we're not going to drop fossil fuels overnight, or cement, or steel, or big meat, right? So we have to have these companies for at least the short term. I believe very strongly we should be doing everything we can to persuade them to change. Regulatory regime if we could, customer pressure, but I think investor pressure is very powerful. Look at what happened at Exxon, right? They have someone new on the board. Then maybe it will help drive change. We're seeing firms like Enel and Iberdrola in Europe really moving very aggressively. So I'm a big fan of engagement first, but real engagement around concrete targets and real measures. And then divesting if you really don't make progress. So it's a full-on engagement strategy, but with the option to divest. People say, well, then you get a lot of dirty assets in the hands of investors who don't care. Absolutely. That's going to be a kind of transition problem. But it's very interesting. Some of the hedge funds, who've bought up all these dirty assets are discovering that their limited partners are not at all keen and are starting to put pressure on them. So I'm for full-on engagement and divest when you must.
I'm wondering why, I don't necessarily, you probably don't have the answer, maybe you do. In that world, why aren't we seeing huge oil companies and oil producers flooding the market while they still can? They must see that in 15 years they're going to have no market. Mm-hmm. And so instead of seeing the price spikes that we're seeing now, shouldn't we see the market flooded while there's still time to do it, right? Isn't that, I'm not trying to think what the rational strategy is if you know that you have all these reserves and you only have a little bit of time left before they're not going to be useful anymore.
So remember that the oil companies are the least likely to believe regulation is coming. So while you and I might say, well, we can clearly see it coming, they are like, I was the Kodak professor of management at MIT for a long time. The biggest, most successful firms in the industry are the least likely to see change coming. So they don't think it's really going to happen. That's one answer. Okay. The other is that for the very big players, they need the current revenue. So if you're in Russia or Saudi Arabia, you really need the revenue. And the risk of flooding the market is high. Yeah.
Thank you very much for the talk, and your energy is very inspiring. I'm a professor at INSEAD Singapore, and one day I had a business leader say, like, we in Singapore, we are a third capitalist, a third communist, a third socialist. Is that part of your reimagination?
I don't think I want to go on tape as saying that I would be a third communist. In the sense of, you know, state ownership of the means of production, that makes me very, very jumpy. But is my end state something like Singapore on a large scale, where the government tries to work with business and appears to be genuinely concerned about the well-being of its citizens and believes it's all the citizens? Yes, I can really see that. Now, you live in Singapore, so you're more aware than I that there are issues with the Singaporean model. It's not completely perfect, no human system is. But I think most fundamentally it's so small. So in a sense, the big question we face is, how do we think of ourselves as a community invested in the future when there are 9 billion of us? How do we do that? That's the big challenge of our time, right? And I think very large global companies who start to use that language is one way into an answer. But yeah. Thank you. So maybe half and half, socialist and capitalist, no communist.
So I think we can take one or two more questions. Somebody who hasn't asked a question yet, just to make sure people get a chance.
You mentioned that the fossil energy companies might not be the most advised to make change. There are voices going up that they actually cannot handle green energy, for example, as well within the company, that just cannot work with the mentality. So there's investors that are arguing that they should be split, which would, I guess, create basically a bad player and a good player in these terms. What's your view on this?
So it's quite true that large incumbent firms have trouble doing new things. You know, I once described my PhD thesis to a taxi driver, and at the end he said, so large companies get fat and lazy and complacent, have trouble doing new things. Can I get a PhD from Harvard for that? So it's absolutely true, but here's the kicker. The large firms have a ton of assets that are really helpful for the new things. They have enormous access to enormous capital. They have lots of very smart people. And they have distribution channels and lots just of technical know-how. So I think we're going to need a mix. One of the reasons to like to have the new assets inside the old company is that it can lessen the pain of the transition. Right? If I know that my job is to run this asset into the ground, that's not very inspiring. And I'm going to fight that subconsciously or consciously. If I really believe, at Iberdrola, for example, the renewable assets are more than half of the portfolio, and they are more profitable than the fossil fuel assets. So, you know, that firm is going to change. So I'm a fan of doing it inside. I think we're going to have to do it inside. I don't think it's a good idea to spin them off. I think it's a way the investors, some investors, again, are trying to make short-term profits on bad actions. So not a fan of the spin-off.
Last question. Anyone who has not, we have some questions, but anyone who has not yet asked a question.
No pressure. Yeah.
Okay. I wanted just to come back on a few notes that I took during the lecture, because, so as we all know, we are all MBA, and I put some key elements of what could help actually to reinvent capitalism. So one of the first one is being purpose-driven, and I put next to it, it's not easy. Then I put something about acting collectively, and I put it's hard. And then I put invest in what matters for society, but you don't get rich. We all know we are MBAs, and we are prepared actually to be rich somehow. We are not really trained to work on public-private partnership, and we don't even know what is purpose-driven, and we don't learn it. So how do we move from there, concretely, from a business school point of view?
Whoa. So those are different. Business school versus MBA is different, okay? And again, it's not that you won't get rich, it's that you won't get bizarrely rich, okay? So I'm not talking about, you know, like sweeping the crumbs from the pavement. You can run a purpose-driven firm and make a great deal of money. You can also have way more fun. No, I really mean it. The world is changing. This is so much more fun than put your heads down and just make money. From the business school perspective, well, we need to change the entire curriculum. Okay. I will tell you that at Harvard, my elective went from 28 people to more than 400. The dean asked me to take over a first-year course in leadership and bring this material into the first year. Our accounting course is all over these issues. Our production course is all over these issues. Our OB course is all over these issues. Finance, not so much. I'm sure that varies by business school. But
not so much.
but it's really coming. I mean, hundreds and hundreds of faculty are thinking about these issues and how we drive change within business schools. But we can do it. Give us 4 or 5 years. We'll transform the curriculum.
I think on that, positive note, I'm going to invite you back up to thank our speaker.
As the final word, I just want to say thank you, Professor Henderson and Professor Stabile, for a very thoughtful conversation tonight. And I would like to thank you, Hoffman Institute for Business Society, and Cattell and Anna for helping making this happen. And finally, thank you to all the audience here tonight for taking out your precious time at night time, to be here with us. We also have another interesting event as part of the SDG week, also hosted by Endeavor Club, the panel and workshop, The Journey to Become a Sustainable Business, tomorrow morning at 10 a.m. So if you guys are interested, make sure you register for the event. So that's it. Have a great evening, everyone, and thank you again.